Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Trade talks. President Trump expects to speak to China's Xi Jinping this week as tensions between the nations surge over access to chips and rare earths. The dispute has the potential to endanger their fragile tariff truce. Prisoner swap. Russia and Ukraine meet in Istanbul and lay the groundwork for new prisoner exchange, but fail to reach agreement to end the war. And reshaping the Middle East financial order, how bankers and business leaders are shifting their attention across the region in the face of weakening oil prices. That is the focus of today's Big Take. It has just gone 8 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Well, we kicked off the show yesterday with more of those tariff headlines and the fact that the U.S. were accusing China of violating that so-called Geneva Agreement. We're going to talk shortly about the latest developments in that space and whether that call between President Trump and Xi Jinping could actually take place this week, and we could see further de-escalation on that front. But take a look at how markets are faring. S&P dipping this morning, futures down about 0.4%. That we did manage to end in the green yesterday, eking out a positive session of 0.4%, despite the fact that ISM manufacturing number came in contractionary territory for the third time in a row. So keeping a close eye on how U.S. data is coming out. Today, we've got factory orders, jolts, durable goods, and then on Friday, the big one, NFP, to watch out for as well. 10-year yields, take a look at 10-year today, 4.4%. The U.S. curve continues to steepen. So you're getting weak data, so that's pushing front-end yields lower. But, of course, concerns about the fiscal outlook continue to drive the steepening of that curve. And we're seeing that now, 530s in the U.S. almost breaching 100 basis points. So also keeping an eye on that development, too. The USD today gaining up 0.2%, but we are very close to two-year lows in the greenback as we talk of the diversion between what's been happening with equities versus the performance in the USD. And then Brent sitting just shy of $65 here, up 0.4%. The reaction yesterday after that OPEC Plus decision, coincidental perhaps with geopolitical developments, was an increase in the price of oil of more than 3%, energy sector being the best performing sector in the S&P yesterday. So buy the rumor, sell the fact. Switching over, I just also want to draw your attention to what's been happening to the price of Ukraine bonds. This is interesting in the context of those discussions that have been taking place in Turkey. No real signs of a breakthrough. And as you can see, the prices of these Ukrainian bonds have dropped something like 8 percentage points since where we were mid-May, when there were a lot of hopes about the potential for a breakthrough, now sitting at around 48 cents on the dollar. So this just tells you that the markets are beginning to unwind the possibility of an imminent breakthrough when it comes to Ukraine and Russia. Okay, let's also check in on how markets in Asia are faring. Avril is in our Singapore studio. A lot of things going on, Avril, but maybe a lot of focus as well on that JGB auction too.
Yeah, certainly the Japanese government bond auction, but we're seeing Asia stocks more or less moving in tight ranges, though they're positive, tracking Wall Street. Aside from the Japanese government bonds, which I'll get to in a bit, we also have the focus on the Chinese manufacturing activity indicators. This is the private survey, the Tilton one, and it plunged, defying expectations of expansion to about a two-year low. So mainland markets that have been on a long weekend coming back to this data, our intelligence colleagues, Bloomberg intelligence colleagues, they've been highlighting how it's not that uncommon. We've been seeing this in times in the past where the data from the official manufacturing as well as the private survey, they sort of tell us different things, go in different directions. That being said, it does seem to be feeding into expectations of stimulus and maybe a bit of support for stocks there. Now, on the JGBs, we actually saw the bid to cover ratio. I think it was the higher than the one-year average, so pretty solid demand. I think that's feeding into a bit of a feel-good factor when it comes to Japanese government bonds, and we're seeing them mostly rising across the curve. But after this 10-year auction, don't forget, we have a 30-year one that is due on Thursday to keep an eye on as well, Jumana.
Yeah, and it has ramifications across all fixed income markets. Avril Hong in Singapore, thank you so much. Now, the U.S. is extending the tariff pause on some Chinese goods until August the 31st. The White House also says President Trump is likely to speak this week with Chinese leader Xi Jinping.
I can confirm that the two leaders will likely talk this week. And as always, when there are foreign leader calls, we will provide a readout of those calls. So we'll see you guys later. Thank you.
Let's bring in our China correspondent, Min Lo, in Hong Kong. Well, the call that everyone has been anticipating and waiting for, how likely is it that it actually takes place this week? How open are China to having a call with President Trump?
Yes, Joanna, I was just scanning Chinese state media earlier today, and I haven't seen any article discussing the prospect of this call between President Xi and President Trump. And suddenly it seems like it is the U.S. that is a little bit more urgent and a little bit more keen about having this call sometime this week. We haven't gotten any official confirmation from the Chinese side about a potential call. And we know President Trump has said that he's confident he will be able to clear up a lot of these tensions over a phone call with President Xi, that the two leaders must come together to break this deadlock. But from the Chinese side, we know from past tradition that they tend to favor having lower level officials meet to iron out certain issues before culminating in this leaders call. They often only agree to that when they're clear that there are certain expected outcomes that they're confident they will be able to get. So it looks like right now the conditions doesn't seem too favorable given all the sort of tensions that have ratcheted up in the last few days.
And also the commentary that came out of the U.S. administration over the weekend accusing China of violating the Geneva Agreement. Do we have an idea or better idea of some of the key issues that President Trump would want to raise on a potential hypothetical phone call with Xi Jinping here?
Yes, that's right. And both sides are accusing each other, Joanna, of violating that Geneva trade agreement so far. And when it comes to the U.S., they are concerned about the flow of these critical minerals back to the U.S. because part of the agreement was that China would roll back some of these non-tariff countermeasures, including the flow of critical minerals. But the U.S. is saying it has been slow and they're not clear whether this was intentional on the Chinese part or is it just administrative backlog, because many of these exporters in China, they have to get clearance from the Ministry of Commerce in China for permission to export to all countries, and that process can be sometimes quite, opaque, not really open to outsiders' views. So it's something that, some people say the Chinese government can just turn on and turn off the tap as they like, but you don't really know. So that's what they want to clarify with China about. But when it comes to China, the Foreign Ministry has mentioned a series of actions that the U.S. has taken that they have been very upset by. One is the revoking of Chinese student visas, and there is also number two, the expansion of these chip curbs, limiting the sale of chip design software to China, and also limiting the sale of these critical parts and jet engines as well. And over the weekend, we had the Shangri-La dialogue. There was the playing out of the China threat. Reuters reporting that the U.S. is preparing to step up military arms sales to Taiwan, and that is something that China has always maintained is their red line. So a lot of issues that China also says means that the U.S. has been reneging on their part of the deal as well.
Yeah, and also, to your point, a progression from just speaking about tariffs to other non-tariff barriers as well, and those are significant. Bloomberg's China correspondent, Min Lo, in Hong Kong, thank you so much. Well, speaking of China, a private gauge of China's manufacturing sector has experienced its worst slump since September 2022. The Caixin manufacturing PMI fell to 48.3 last month, below the 50 mark, separating expansion from contraction. The results suggest that smaller Chinese companies were disproportionately affected by the trade war. Joining us now is Andrew Tilton, Chief APAC Economist at Goldman Sachs. Andrew, really good to talk to you. Thanks so much for joining our show. Let's just start with that data. How do you read the latest signals that are coming through from the Chinese economy with these Caixin numbers, the lowest they've been since 2022?
Well, we are seeing weak sentiment among manufacturers, not just in China, but in other parts of the Asia-Pacific region. More broadly, what we call the soft data surveys about sentiment tend to be weaker than hard economic indicators of actual activity. We saw that divergence in the U.S., and we're seeing it in Asia as well, with these manufacturing surveys suggesting that exporters are worried about the outlook.
Obviously, as an economist, your job is going to be tricky now because you're making forecasts predicated on a situation that may or may not happen. But can I just ask you how influential you think where we end up for tariffs and reciprocal tariffs is going to be for the economic outlook for China and the broader Asia-Pacific region?
Tariffs are the critical variable. We think that the level of reciprocal tariffs will have a big impact on regional growth. If we start with China, we think about 2.5% to 3% of China's GDP is exposed to exports to the U.S. So at the previous peak of over 100% tariffs on China, we would expect the vast majority of that activity to go away. More than 2 of the 3% exposed to the U.S. would be hit. With the current level of tariffs, so plus 30% relative to where we were at the beginning of the year, we think the hit to Chinese growth would be about 1 percentage point. That's manageable, but alongside the weakness in the housing sector, it is likely to require more policy support from China this year. The biggest potential growth hits are actually to smaller economies that have even more export exposure to the U.S.
It's interesting because you put out a report overnight saying that for other Asia-Pacific countries, they're actually caught between the demand hit that's potentially going to come from the U.S., but equally the supply hits coming from China as China looks to perhaps diversify its export destination countries and nations. So how, as a smaller Asian-Pacific country, can they navigate both of those headwinds?
Well, we have two opposing forces. On the one hand, China remains extremely competitive. If we adjust for the deflation in China and the inflation in other countries, China's real effective exchange rate has fallen by about 20% since COVID. So China's very competitive, gaining market share around the world, ex the U.S. That's going to be very challenging for exporters elsewhere in the region. On the other hand, there is the possibility of some trade redirection. As China faces higher tariffs, there may be efforts by Chinese companies to export to places, particularly in Southeast Asia, perhaps perform a bit more manufacturing or value added there, and then ship to the U.S. So there's the hit from direct competition with China, but the potential benefit from trade redirection. In most cases, we still think that's going to be a net negative, but to the extent that economies in Southeast Asia in particular can validate themselves as transshipment points, as waypoints for more processing, they'll have a chance to benefit in part from the trade conflict.
How do you see the outlook for Asian currencies? Obviously, on one hand, we've been talking about the weakness of the greenback, but on the other, it appears as though in certain cases, like in the case of Taiwan, authorities have been facilitating the appreciation of the currency versus the USD, perhaps in anticipation of some of these talks with the U.S. administration. What do you see as the path forward?
We expect more dollar depreciation. In part, that's because the dollar still looks highly valued on our currency models, something like 15% above long-term fair value. Those models don't have a lot of short-term predictive power, but it still suggests the gravity is towards weaker dollar. Of course, we also see suggestions that foreign investors might, on the margin at least, allocate a bit less of their incoming flow to the U.S. to U.S. investments in the future. That could be net negative for the dollar. And lastly, U.S. policymakers seem to desire a weaker dollar. The number of policymakers associated with the administration have suggested that a weaker dollar, modestly weaker dollar, might be a desirable thing, and it might be a feature of U.S. negotiations with Asian economies as they discuss trade. So we do think that some pressure to allow Asian currencies to appreciate, to intervene, for central banks to intervene less and stop trying to keep currencies weaker versus the dollar, that's likely to feature in negotiations. And we do think the net of these forces is likely to be further weakening in the U.S. dollar over the coming years.
Very clear. Andrew Tilton, always good to talk to you. Thanks so much for coming on Horizons, Chief APAC Economist at Goldman Sachs. Now, President Trump is trying to sway Republican holdouts on his multi-trillion-dollar tax bill. Trump is urging lawmakers to work swiftly to get the bill to his desk before the 4th of July. Senators have differing opinions on the bill, including disagreements over deficit reduction, clean energy cuts, Medicaid revisions, and budget cuts. Republicans are also looking into the potential impact of a so-called revenge tax buried in the fiscal package. Still ahead, we discuss the moves in treasuries and how that's playing out in the corporate space with Victoria Harling from 91. That's at 8:30 a.m. Dubai time. But first, Russia and Ukraine agreed to a prisoner swap, but a truce still looks elusive. An update next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersetchi in Dubai. Russia and Ukraine have laid the groundwork for new prisoner exchange after a second round of direct talks in Istanbul. However, the hour-long meeting failed to bring the two sides closer to ending the war. Kremlin officials, meanwhile, are said to be angry and alarmed over Ukraine's brazen drone strikes on Russian warplanes in Siberia and across the country. Now, for more, Bloomberg senior editor Bill Ferries joins us now. Let's talk through what was achieved during the second round of direct discussions in Istanbul. No breakthrough, but we did get a prisoner exchange.
That's right. And as you mentioned, it was basically about a 1 hour discussion, the two sides. And like they did in their first negotiation about last month in Turkey, they agreed to a prisoner exchange, specifically looking at severely wounded prisoners, soldiers under the age of 25, as well as the exchange of perhaps thousands of dead bodies that the two sides have collected so far in this conflict. In terms of the prisoners, the Ukrainian side estimated it could be about 1,000 prisoners or a little bit more, depending on those different categories. So that was the main achievement, and very little discussion about kind of the longer-term effort here to secure a major breakthrough. Russia is still seen as putting forward kind of maximalist demands on Ukraine. Ukraine calling for an immediate unconditional ceasefire. Russia proposing more of a 2 or 3 day ceasefire to collect bodies that are strewn along the front. So not a lot of progress here in the second round. Ukraine saying they hope for a third round of talks at the end of the month.
Yeah, and yesterday, Bill, we were talking about Operation Spider's Web, which is what Ukraine dubbed the operation, the secretive drone strikes across 5 different time zones in Russia, a big victory for Ukraine and the Ukrainian army. How do you think this is being factored into the calculus of the war and to how Russian President Vladimir Putin views his chances of victory? Because, in the run-up to this operation, there was a belief, at least from the Russian perspective, that they were, quote unquote, winning this war.
Yeah, it's a really embarrassing blow for Russia and for Putin in particular, especially that some of the targets were so deep into Russian territory, so far from those front lines, literally thousands of miles. And the fact that it took 18 months of planning shows that, the Ukrainians were really able to avoid getting disrupted in their effort. Strategically, it's important that some of these bombers were taken out. Some of them have been used in long-range strikes on Ukraine. But I really think it's more of a symbolic blow at this point. Russia has, it hasn't really backed away from its demands so far. They haven't perhaps felt like they've lost the leverage that they see themselves having in these negotiations. I think it's going to take more than one of these kinds of attacks, but it does show Ukraine's ingenuity on the battlefield and their use of drones, and I think it will make Russia cautious about how it deploys some of its assets in this conflict, even far from the front lines.
Yeah. Bloomberg's senior editor, Bill Ferries, thank you so much for the latest on Russia-Ukraine. And coming up, South Korea heads to the polls. We get the details on what this election means for the country and foreign policy. We're live in Seoul next. This is Bloomberg. South Koreans are voting today for a new president. That's after last year's short-lived declaration of martial law, which led to the downfall of Yoon Suk-yeol and the country's worst constitutional crisis in decades. The Asia Trade co-anchor Sherry Han joins us now from Seoul, and I believe you're actually in a polling center, so a lot of excitement behind you, Sherry. Set the stage for us. The latest I was seeing was that the opposition candidate, the nominee Lee Jae-myung, was the front-runner going into today. What can we expect?
I mean, one of more than 14,000 polling stations across South Korea. We have seen a lot of excitement about this election. Of course, it's a snap presidential election after the constitutional crisis that you mentioned with the ouster of President Yoon Suk-yeol just 60 days ago. We have already seen 23% of the electorate casting their votes. And remember, we already had early voting with 15 million people casting their votes last week as well. A very important election for South Korea. Of course, we have seen the fragile state of the South Korean economy and the leadership vacuum for the past 6 months, really making it difficult for policymakers to negotiate with Washington when it comes to those tariffs from President Trump. 25% on all South Korean shipments, really dialed back to about 10%, but only temporarily. So this polling site right now is very near the National Assembly, about 10 minutes drive. And of course, Yeouido area has been very symbolic in this democratic fight here in South Korea after the declaration of martial law back in December.
Yeah, and Sherry, you cite obviously one of the big challenges, which is going to be on the foreign policy front, dealing with the Trump administration. How is foreign policy likely to be shifted depending on who actually becomes the next president of South Korea? Is it going to have a material impact?
Right. I could barely make out what you're saying right now, Germana, because it seems the connection is not that great. But I believe you asked about foreign policy. And what we have seen so far is that candidates, the leading candidates from the left-leaning Lee Jae-myung of the opposition Democratic Party against, say, rival Kim Moon-soo of the conservative ruling People Power Party have very different approaches. We have seen Lee Jae-myung talking about wanting a solid alliance with the United States, but then at the same time, he wants stable ties with the likes of China and Russia. Of course, that's going to be a tricky situation. Whoever wins will need to have to balance ties with both the United States and China, especially when it comes to key issues like imposition of export controls on advanced tech, a key export, of course, for South Korea. When it comes to China, we have seen, of course, that Kim Moon-soo does want a more traditional approach to foreign policy. He wants a stable alliance with the United States and Japan as well.
Sherry, gonna leave it there. Thank you so much. It was so great to have you live from the polling center. That was Sherry Han in Seoul. Well, coming up, we're going to talk EM fixed income with 91 as traders increasingly buy into stagflation. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Trade talks. President Trump expects to speak to China's Xi Jinping this week as tensions between the nations surge over access to chips and rare earths. The dispute has the potential to endanger their fragile tariff truce. Prisoner swap. Russia and Ukraine meet in Istanbul and lay the groundwork for a new prisoner exchange, but fail to reach agreement to end the war. And reshaping the Middle East's financial order, how bankers and business leaders are shifting their attention across the region in the face of weakening oil prices. That is the focus of today's Big Take. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. We saw moderate gains for Wall Street yesterday, despite the fact that the ISM manufacturing number disappointed to the downside, third contraction in a row. But attention also now turns to other data coming out of the U.S. this week. We've got durable goods today, JOLTS, and then later NFPs as well. Futures, though, leaning towards the red, down 0.4%. 10-year yield sitting at 4.43. We moved up about 5 basis points yesterday in trade. As we speak, speak about the further steepening of the U.S. yield curve in the front end, growth concerns in the back end, perhaps fiscal outlook has been deterring some of those long-term investors. The USD today trading about 0.2% firmer, though we're very close to lows not reached since 2023, so two-year lows for the greenback. And again, I mentioned this at the top of the show. As we speak about the recovery in U.S. equities, the dollar has not participated. So that is an interesting characteristic of U.S. assets this year. And then Brent just shy of $65. We are up 0.3%. A big rally yesterday, up 2.5%, despite the fact that OPEC Plus announced once more that they're increasing the production come July, and even setting the stage for a potential other increase in production come August as well. Switching over, I just want to point out those ISM manufacturing numbers that I referenced, and you can see from here that it's been several months of declines, back-to-back declines for the ISM manufacturing figures. We do get services as well later this week, so watch out for that. But we're basically not back to levels in terms of orders that not reached since the pandemic. So weakness coming through. Very interesting. Exports the lowest since 2020. Imports the lowest since 2009. And a clear manifestation of how these tariffs are impacting U.S. industry. Okay, let's also check in on how markets in Asia are faring. Avril Hong is in our Singapore studio, and it's not just weaknesses in U.S. data that we're talking about, but some Chinese data disappointing to the downside today as well.
Absolutely, Jumana. I mean, we had the factory activity indicator, right? This is based on the private survey, the Tyson one. And there were expectations for an expansion. It actually plunged to the lowest level in about 2 years in contraction territory. And it's interesting because the official PMIs for manufacturing out of China had been showing some signs of improvement. To kind of square this away, our Bloomberg intelligence colleagues have highlighted as well that it's not terribly uncommon to see the official and the private survey gauges sometimes go in different directions, tell us different things. It could be a bit of a misfire. That being said, that miss is feeding into expectations of stimulus out of the Chinese authorities that seems to be helping to support Chinese stocks. Also keeping an eye on the 10-year yield in Japan. This is following on from the JGB 10-year auction, which saw solid demand. That being said, I think most market participants is reading this as short-term relief. Don't forget, we still have a 30-year auction on Thursday to contend with. Jumana.
Avril, thank you so much for the overview. Avril Hong in Singapore. Let's turn to the Middle East now, as bankers and business leaders are shifting more attention towards Saudi Arabia's neighbors in the Gulf, such as Qatar and UAE, as the kingdom grapples with lower oil prices and a deep deficit. That is the subject of today's Big Take. So for more, let's get out to Bloomberg's Matthew Martin in Riyadh. Really interesting deep dive into, I would say, the developments over the last couple of months, years even, Matthew. But then also coming on the heels of President Trump's trip around the GCC. And you point out in this piece that Saudi Arabia perhaps is a little different in terms of financial ass versus, say, Qatar and Abu Dhabi, because it has transitioned from being a net exporter of capital to a net importer of capital. Tell us more.
Yeah, good morning, Jumana. I mean, exactly as you say. I mean, you know, sort of very simply, Saudi Arabia, just the sheer extent of this domestic spending program that's been launched under the Crown Prince, Prince Mohammed bin Salman, means that Saudi Arabia, although it has all of this huge oil resource which has been pumping for decades and earning, you know, tens and hundreds of billions of dollars on, a lot of that is now all being sucked up on domestic spending, which means increasingly that Saudi Arabia actually needs to raise money from outside to bring into the country to invest in Saudi Arabia, which is a very different position from neighbors. I mean, especially this is relevant for Qatar and for Abu Dhabi, where they're smaller economies, they have big hydrocarbon endowments, so they are earning far more money than they can possibly digest in their local economies. And so what this means is that, you know, a few years ago when the PIF was making a big splash and doing all these big investments and seems to be sort of backing every deal that was coming across and, you know, giving $100 billion to SoftBank, everybody was flooding into Saudi Arabia because they thought that it was going to be an easy place to come and raise money. And now what they're finding is that actually what Saudi Arabia wants is quite different from the things that Qatar and Abu Dhabi want. Qatar and Abu Dhabi are much more able to say, we just want to do this deal for financial returns, whereas Saudi wants something quite different from what it's going to do with these sorts of partners.
Yeah, and also, the reason that this is the situation that these countries find themselves in is, of course, the break-even oil price in UAE is significantly lower than it is in Saudi Arabia. And Qatar, of course, have the boon coming from extra gas fields coming online. So that's the perhaps hydrocarbon backdrop to all of this. But how do you think this is going to translate into investment activity into Qatar and into Abu Dhabi in the coming years, Matthew?
Well, I think what we're going to see, and you and I were both in Doha a couple of weeks ago for the Qatar Economic Forum. The Qataris are painting a very bullish picture. They are they're very excited about the opportunities that they see investing into the United States. So the QIA has said that it's going to put $500 billion into investing into the U.S. over the next decade. So, I mean, that means that if you are a global fund manager, Qatar is going to be one of those key places that you're going to want to go to try and raise money for your funds or for your private equity takeovers and all of those sorts of big global deal making. And similarly, in Abu Dhabi, you've got that same dynamic. Both those countries as well, of course, have already invested a lot in the infrastructure that they need domestically. So they don't need to invest as much within their own countries as you do in Saudi Arabia. You know, Saudi's got a very different proposition. It's got 35 million people. It's got a very, very oil-dependent economy. It hasn't invested much in its domestic infrastructure, so it's plowing all of that money back in. And as much as it might do some international deals, it really wants them to have a local angle which play into this plan of diversifying the Saudi economy and developing it and creating jobs.
Bloomberg's Matthew Martin, thank you so much. And you can read today's big take on the terminal and Bloomberg.com. Now, traders are buying into the stagflation narrative, with the U.S. bond curve steepening after factory activity in May was a touch below April's levels, while prices remain elevated. Joining us to discuss this and more is Victoria Harling, co-head of emerging market corporate debt at 91. Really good to speak to you, Victoria. I actually want to start, before we talk about the steepness of the U.S. Treasury curve and how that's translating into EM opportunities, just merely about all of the noise around tariffs, the policy uncertainty now. Clearly, it's the U.S. that's in the driving seat. But is there any silver lining at all for emerging market countries in the middle of this haze of tariffs and what it might mean?
Yeah, I think it's an incredibly interesting time right now with a lot of uncertainty. So it's very hard to have strong conviction around the outcomes of tariffs and the impacts that will be felt. But I think what's really fascinating, and you've touched on it a little bit, here you can see local currency has appreciated quite meaningfully, because this now is not a story about EMs per se, but more about the sustainability of the dollar. So for the first time in a long time, you're now seeing emerging market currencies being able to support themselves, because actually you have very strong central bank policy, high interest rates that can now afford to be cut as we're starting to see some inflation dynamics stabilize, and real rates can afford to come lower. This should therefore support the domestic demand that's offsetting these trade negotiations.
And as we talk about the strengthening in some of these EM local currencies, a renewed appetite to engage in those EM carry trades, how is that translating into opportunities in fixed income as well?
Yeah, I think one of the really interesting narratives that we haven't had really for some time is this overweight dollar policy that many emerging economies have ended up having. And so the repatriation domestically of some of the overweights that they've been having will support currencies. And we can see that particularly in Asia, where we have big big imbalances and big dollar overweights. And so I think you're going to see strengthening continue in emerging economies. And as those savers look for diversifying their savings pools, you can see other emerging economies benefit. And it's interesting, we just heard about the Middle East, but we are actually hearing and seeing on the ground that is really happening with renewed interest in buying and investing in the Middle East, particularly from China and Asia.
That is interesting. Let me pick you up on that then. What is the, I would say, allure to invest in the Middle East then from those types of investors? Is it the possibility of gaining access to a dollar-linked asset that isn't necessarily domiciled in the U.S.?
Yeah, as we know, everybody hates volatility, and that's been the one negative drag to attracting investors into emerging market currencies. But I think that narrative's shifting to a degree. But you're absolutely right. In the Middle East, the stability of the currencies is a really big pull. But actually, this diversification into the non-oil sector that's driving growth in other ways is actually a really compelling story. So we're seeing a lot of interest in project finance for some of these infrastructure deals, but also in investing in some of the bonds that are available, particularly in Saudi. I think some of the appeal and that the Chinese see is a replication of the China story 20 years ago.
So interesting. Yeah. And to your point, Asian investors obviously looking for other fixed income markets to invest their cash in. Speaking of fixed income, in the U.S., the curve has been steepening quite a lot. The front end moving lower or staying where it is, but the back end 10-year and 30-year yields keep moving higher. What knock-on effects could that have on emerging markets? Yield curves as well? And do you see it as potentially also a tailwind? Because in times of curve steepness in the U.S., that tends to benefit EM markets.
Yeah, I mean, I would say that the biggest challenge to EMs is stability of their currencies. And we already have significantly high real rates. So I think we can afford to see those curves perform well generically with base rates being cut, and that should just benefit duration assets overall. I do think there is a concern around the steepness of the yield curve in the US when you consider how much net foreign investment is in long-term assets. It's a concern that we could see net losses should there be a big retrenchment of those assets away from the dollar. And of course, the US cannot be immune from the rest of the world, and the rest of the world can't be immune from the US. So if we did start to see significant steepness with no Fed interaction, that would have just a generic impact on risk assets all around the world, which would potentially weigh on growth, etc. But I do think the rate story is still quite compelling in EM.
Very clear. Victoria Harling, a pleasure to have you on our show today, co-head of Emerging Market Corporate Debt at 91. And coming up, Zambia plans to impose losses on institutions as it reworks $13.4 billion in loans. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Zambia plans to impose losses on African development banks as it reworks $13.4 billion in loans, with Ghana echoing the treatment. However, development lenders warn the dispute could prolong defaults and delay their economic recoveries. For more, Bloomberg's Ndiro Ganga joins us now from Kigali, Rwanda. Fascinating story as Ghana and Zambia work their way through debt restructuring. But there has been a lot of pushback on this proposal to impose losses out of the African multilateral lenders. Just walk us through the conversations that are being had between the Creditors Committee on one hand, Ghana and Zambia, but then also the African multilateral lenders as well.
Hi, Jumana. So this is a three-way tiff that we're seeing unfold. You have the Trade and Development Bank and the Afri-Exim Bank saying that they're multilateral development institutions, just like the World Bank and the IMF. And as a result, they should be given preferential treatment when it comes to their debt. These are banks that are also arguing, particularly Afri-Exim, that the preferred credit status is enshrined in its establishment. And you have member states who signed this treaty. As a result, they are entitled to it. But the Official Creditors Committee does not see it like that, and they make a very strong case for it. One of them being that these African lenders lend at almost commercial rates, while you have the World Bank and the IMF that lend at concessional rates and also give grants to some of the poorest countries. Another reason that they raise is the fact that when these countries are in default, they can go to the World Bank and the IMF for programs to ensure net positive flows. And also they pointed out, which is very interesting, that these African lenders are fully profitable and sometimes pay out dividends to their shareholders, which discredit them from preferential credit treatment. And they are fighting back and in a rebuttal saying that one of the reasons why their cost of lending is really high is because they're also borrowing at a really higher rate. And they've shown willingness to go all the way. We saw them successfully sue South Sudan. And it raises a couple of issues, one of them being that these banks are feeling like they're being treated unfairly. Decisions about their outcome are being made without them being consulted and not having a seat at the table. And it also speaks to questions that the continent has been raising about the global financial architecture. And that's part of the priorities for South Africa and the G20 presidency, where we have already seen Africa get a seat at the IMF board. And they're also working on launching a continental credit system because they say that the big three have been unfair. They're not doing a differential diagnosis, which then their ratings does not reflect the true status of credit on the continent.
Okay, so clearly it could have ramifications on those multilateral lenders, but what are the broader ramifications on the continent and the cost of raising capital amongst other lenders in the continent as well?
Jumana, if these banks are forced to absorb these losses in the restructuring, what then happens is that they will be downgraded from a BBB to junk territory, and most of their bondholders will be forced to sell because they're not allowed to hold non-investment debt, grade debt rather. And what we will likely see is that the pool of people who can lend and invest in these banks is going to shrink significantly. And so if they're borrowing at a higher cost, then it means that African countries who go to them will also have to absorb some of that cost. Will there be winners in this? Absolutely, Ghana and Zambia. But it will be at the cost of every other African country that will go to borrow from them. But we're seeing this unfold in real time. When Bloomberg reported that Ghana intends to ask the banks to restructure their debt, the finance ministry wrote to them. And so we are seeing this unfold in real time.
Bloomberg's Ondiro Ganga in Kigali, Rwanda. Thank you for bringing us that story. Super interesting and important for the lending outlook for many of these borrowers. Well, coming up, Taiwan's TSMC is predicting record 2025 profits amid a global expansion. We'll discuss the latest developments next. This is Bloomberg. TSMC sees profits rising to a record high this year. The CEO, C.C. Wei, told shareholders its technology will remain secure amid a global expansion. It comes after suggestions the company was evaluating building an advanced production facility in the UAE. Let's bring in Bloomberg's Annabelle Jewelers. Belle, let's just start with the outlook that they gave, forecasting record profit in 2025. What do they point that down to?
Well, it's just that continued demand that we're seeing around AI chips, and actually saying as well that they're seeing very strong demand for chips that are used in humanoid robots. So it's not just about sort of tools that are being used for large language models or AI service for that use, but it's also going into hardware now. But just in brief, so we had the AGM and sort of reaffirming a lot of the lines that we got from the earnings just a couple of weeks back, but saying that the 2025 sales growth outlook is still going to be expansion of around 20%. That's in US dollar terms, and actually just on US dollar versus Taiwan dollar, it has been that rapid appreciation of the Taiwan dollar, and they said as well that's going to really impact their margins. They're saying that gross margins could take a dent of around 3% due to the local currency weakness. Also on the energy front, this was interesting because Taiwan recently shut down its final nuclear reactor. Energy security on the island has been a very, very big sticking point, but TSMC saying as well they're going to be using as much renewable energy moving forward, and that they do as well support the local government's plans to start collecting carbon fees, and that would start from next year.
Yeah. The other line that caught my attention was the CEO saying TSMC does not have plans for a factory in the Middle East. Give us the context of that statement.
Yeah, so this was in response to some reporting that we had from Bloomberg just a couple of days back. And what we were saying was that TSMC was looking at building an advanced production facility in the UAE, and that they had been discussing this possibility for a period now with the Trump administration. What we had in our reporting was that TSMC was looking at a substantial investment into what's known as a gigafab, and that's a complex that would have been multiple factories put together, similar to what TSMC is building in Arizona. Now, CC Wei, he said that they don't have plans, but I think it is important to add a bit of nuance here, which is that, you know, in our reporting as well, we were saying that this UAE site could be perhaps years away in terms of groundbreaking, and certainly something to be tracked very closely, especially when you've got multi-billion-dollar investment deals being done between NVIDIA and also partners in the UAE and Saudi Arabia.
Yeah, a big push out of the UAE in that domain. Bloomberg's Annabelle Jewelers, thank you so much. Okay, a quick look at equity futures before we round up the show. Things are leaning towards the red. I've got to say, I've tended to notice something. Asian hours, you always get futures leaning towards the red. And then by the time the U.S. come in, by the end of the session, things are back in the green again. So that probably tells you about Asian sentiment versus U.S. local sentiment towards their own markets. But here's the picture for today. Futures in the U.S. leaning towards the red. European markets leaning towards the green. And that is it for Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.